Hello and welcome to today's webinar, The Rise of Financial PR, how the role of PRs and comms experts is influencing more than just finance. My name is Philip Smith and I'm the Head of News and Content at Gorkana, and I'm delighted to be your host and moderator for the next 45 minutes or so. I'm delighted to say also that I'm joined by two experts on the subject, Maria and Tim, who I will introduce properly in a minute. But before I did that, I wanted to remind you why we've chosen the changing role of financial PR experts as our subject today. As social media amplifies the voice of the consumer, it can sometimes feel that brands and businesses are only 140 characters away from their next comms meltdown. This also means that comms experts have a much wider remit, as well as having to react so quickly, and are relied upon to provide crisis response and high-level advice to manage public image and investor relations. So we felt it was both important and helpful to examine the evolving role of the financial PR professional in that context and see what attributes and skills are needed to be a success as a financial PR in this environment. So, with the help of Tim and Maria, we'll look to answer the following questions in this webinar. How the financial PR role is moving beyond its so-called traditional brief. How corporate stakeholder groups are changing and how these can be addressed. The attributes an effective PR practitioner needs when advising the C-suite. And then finally, we're going to see if we can come up with some examples illustrating the heightened influence and impact that corporate affairs chiefs are having in the boardroom. However, we do want to be guided by you and everyone who's listening into this webinar throughout the next 40 minutes or so. So please do send in your questions. Take the chance to send in questions, and I'll do my best to put Tim and Maria on the spot and get them answered. So I assure you, after we've heard from both of them, and they're both going to present to us with a series of slides, I will make sure that there is some time at the end for your questions. First of all, we're going to hear from Tim, and he's going to set the scene for how the financial communications industry, particularly in the small and mid-cap companies, has changed materially in the last 5 years. We'll look at what this means for the financial advisor and a sort of broad brush description of the financial comms role. Then Maria will look at the changing landscape, give us some more context, and look particularly at the changing nature of business, sort of the changes and the challenges for business in this environment, and what those implications are in terms of reputation and survival, the implications for PRs, and obviously what you need to do to ensure sort of legitimacy in this role and to be able to act as a business enabler. Now, before we're going to hear from Tim first and then Maria, but let me tell you about our speakers. Maria, of course, is Maria Darby-Walker, Senior Director at Citygate Dew Rogerson. She has more than 25 years experience advising boards and senior executives on strategic, reputational and risk and analysts, government and regulatory stakeholders, NGOs, local communities and employees. In recent times, she's been a non-exec director at AIM-listed oil and gas firm Gulf Keystone Petroleum and is currently a trustee of the charity Hostage UK. She says that one of her key abilities is to master the challenges faced by global businesses, developing and cascading segmented messaging across multiple markets and channels to build brand equity, reinforce strategy and support growth. Actually, I think that thing is probably easier done than said in that particular case, but I'm looking forward to hearing more on that from Maria. Tim, on the other hand, is Tim Metcalf, Managing Director and Co-founder, Investor Focus Communications. Tim spent more than 20 years in investment banking, and he says, after identifying the need for a more proactive and focused approach to advising small and mid-cap listed companies from a financial PR and investor relations perspective, he formed Investor Focus Communications with Graham Herring, the founder of Threadneedle Communications, last year. IFC's goal is to provide a first-class advisory and bespoke communications service for its clients with a direct focus on the investor. Tim is an experienced corporate financier and broker, and he spent, as I said, over 20 years, but working at places like Robert Fleming & Co., NM Rothschild, Westhouse Securities, Northbound Capital Partners, and he was most recently joint CEO of Zeus Capital. He left Zeus in November 2014 to form IFC. And according to his LinkedIn profile, he started his career after spending his time motor racing and completing a university degree. It's not very clear from his profile, though, whether he spent time doing both of those at once, but I'm sure we'll hear a little bit more on that. So we're going to hear a presentation from Maria in a minute, but first, Tim is going to present and set the scene for us. Tim, please take it away.
Philip, thank you very much for that kind introduction. And yes, I did race cars and go to university at the same time. I just want to talk you through really how the financial PR landscape has been changing from my perspective over recent times. To set the scene, Philip mentioned that I'm co-founder and managing director of a firm called Investor Focused Communications. We established last year, last March, so just over a year ago. Currently look after over 20 corporate clients, both quoted and private. The majority of those are what you would describe as small and mid-cap, so really anything sub FTSE 250, quite a lot of focus on the AIM market, often companies where there's not a huge amount of internal resource, but do need very much financial communications help to set them apart from the other companies that are on the market. And just to put it into context, there are currently 1,100 companies on the AIM market in London. There are another 600-700 on the main market that we would say fall into our sort of small mid-cap remit. So even the quota universe is quite a busy one. The IFC team, as Philip described, my background is one of broking and corporate finance. I only recently came to the financial PR industry, so I've seen it from both sides. I've been a client, I've been CEO of a broking business where we employed external comms help, and I've now gone over to the dark side and assisting a number of clients. So that's just to put it into context. But how do we see the landscape actually changing? And I think you shouldn't underestimate quite how much it has changed in recent times, particularly for quoted companies. Really, on the back of the financial downturn, there has been very much an increased regulatory burden and focus. I think that's true from the smallest to the largest corporate, particularly quoted. They all have their challenges, but they are focused on that regulatory emphasis on a daily basis. I think there is increased scrutiny, and this comes down really to the rise of social media and people being able to comment on companies 24/7. And there is an expectation for transparency from companies. You are seeing 24-hour news. People are expecting corporates to communicate in a similar way. And against that backdrop, as I said, it's a competitive market out there. There is both global competition for business for companies from the corporate side, but also for capital, whether that's people buying their shares and hoping their share price goes up, but often more importantly, the ability to raise capital to grow the business and take it forward. Another point I'd like to make, just to put this in context, that we increasingly find, and this goes back actually to the regulatory point, is that the financial PR advisor is often the only truly independent advisor for the corporates. Why do I say that? If you look at the financial advisor, whether it's just a main market company or an AIM company, they are very much beholden to the regulator, whether it's AIM regulation or the FCA. That's frankly who they answer to, not the corporate. If you're a lawyer, it's the legal profession. If you're an accountant, you've got your auditing standards. So often for small and mid-sized companies, the financial PR is the independent advisor who is only answerable to their corporate clients. Talked about an advice-led approach in the run-up to this webinar. And why do we think it's changed? Well, frankly, I think corporates are demanding more for their money is the first point. Gone are the days, and this sounds not very pleasant, but it used to be you describe certain financial PR companies that a comma on a press release, a couple of lines in the back of the Mail on Sunday, and you felt that they'd done their job and could charge a monthly retainer. People are expecting an awful lot more at all levels. I think, frankly, at the larger end, they've always got a much more detailed and proper service. But certainly, in the large ranks of corporate and quoted corporates, there has been quite a lack of depth to the advice. And today, really, that advice needs to come from a variety of different areas, and it often needs actually a team approach. It's rare that one individual will have the full skill set to provide the required advice in the boardroom. So in going back to my experience of the capital markets and how that interacts together with Graham and the rest of the IFC team, we feel that you often need 3 or 4 people with very different skill sets to advise a client. We will have on the team somebody who's a press specialist. We'll have somebody who understands actually the regulatory environment and how you've got to interact with that and what you can and can't say, coupled with others who understand social media and how you get the message out there. So very much a team effort, and as I said earlier, often our sort of size clients often lack the internal resource to do it themselves. Just one specific point I'd like to mention is the retail side, which is important for our quoted clients. Often, share prices and market sentiment of listed companies, particularly smaller ones, have a very great reliance on the trading of small retail investors. A lot of the bigger institutional business is done as a matched bargain by the broker, and it's not really influencing things. And private investors have become much more sophisticated in how they invest and the money that they're putting to work, whether that's through their SIP or ISAs or portfolios that they've got. A large part of this is also social media and the ability to comment on companies and share that commentary with their peers who are investing in companies. So we spend a lot of time looking, unfortunately, at bulletin boards and what's being said about companies. A lot of time trying to advise our clients on how you react to that sort of communication. A lot of the time on social media, even if a company's performing well, people are not necessarily saying complimentary things about it. And that can be a difficult challenge for boards to face. They want to immediately react to negative sentiment and people saying not very nice things about them, but there are ways and means of doing that. And one of the benefits, I think, of the external financial PR advisor rather than somebody working internally is the ability to see across a wide remit what other companies are doing, to put it into context and to actually tell the corporate client, you're not the only one facing these challenges and this is how other people do it. So you've got that sort of expectation of transparency, direct communication that needs to be dealt with. It's a changing environment. You've got to be adaptive. There are new things coming up, every day of the week, new forms of media, new forms of communication, and it's not something that, the way things were done perhaps 5 years ago is not the same as it's done today, and I'm sure in 5 years' time it will be very different. So just to sum up on what I've been saying over the last few minutes, I think the role of the financial PR advisor is more relevant than ever, but the brief has widened. A lot of what we get involved in, perhaps traditionally, might have been done by a corporate finance advisor or a broker or somebody else, but it's a very wide remit. There's a need for a deep understanding in many areas. It's a team effort. But the key at the end of the day is to be the trusted advisor. Another element that we get involved with quite frequently is introducing other advisors to corporates, where it's not necessarily our skill set, but we know through experience who's good at doing things and who's not, and helping drive the corporate business forward with the appropriate advice. So that's really all I'd like to say is the introductory presentation. I'll hand it back to Philip.
Great. Thank you, Tim. Tim, before I hand over to Maria, I just wanted to ask you one question, and it was particularly because you talked about the in-house challenge and the in-house resources challenge. When you're talking about small and mid-cap companies, how small is small? How mid is mid?
It's always a good question. From sort of the very smallest might be a company valued at £5 million. There might be a small natural resources business trying to explore and find gold in Tanzania or Turkey or somewhere that will have a very small team and needs a lot of help. If you talk to Goldman Sachs or any of the large US investment banks, small or micro is anything under £1 billion. So it changes.
Of course, but it's great to have that scale in mind. Excellent. Now, before I hand over to Maria, I just want to remind you all to send in your questions. Do let us know what you're thinking and what you'd like to hear us answer or talk about, and I'll put those questions to Tim and Maria when Maria's finished her presentation. Maria, can I hand over to you?
Yes, hi, and good afternoon, everybody, and thank you to Gorkana for the kind invitation to talk to you all today. Thank you all for joining, and thanks to Tim for his insights also, many of which I clearly agree with. When I was asked to speak today at today's webinar, I mistakenly thought that they said wine bar, so I was slightly disappointed when I got here to find glasses of water all round. Clearly that's not a normal error I normally take or make, sorry. As you can tell from Philip's introduction, I have worked in the industry for some 25 years, and like Tim, I've seen both sides of the equation, working in agencies, as you know now currently for one of the UK's leading city agencies, Citygate Rodgerson, but I've also acted as in-house corporate affairs director as well, so I do have a view which hopefully will be useful for you from both sides of the fence. And as Philip said, what I'll cover in my talk today is how I think the landscape we're all operating in has changed, what the implications are for the institutions we are working with and how we're advising them, and how that perhaps impacts our role and perhaps the skill sets that we're going to need to recruit sort of over the coming years, which I think are vastly different from even a few years ago. So I'll start today with a quote which comes from Saïd Business School, who run a corporate affairs academy, which I think in itself shows the standing of our sort of area of expertise. And the quote speaks for itself, but I think it gives us a very good context for our discussion today, and I think it is more true post the financial crisis. It gives us a very good business context as to why having a good reputation, or even plural reputations, as it says here, is more relevant than ever, and why our role as professional financial PR and communications advisors, I think, is even more pivotal than before. I think we're seeing seismic shifts across different continents and different countries, and we're seeing the public in the news every day turning their back on what we call sort of the old politics and the old norms of behaviour. People are tired, as we know, of austerity, they're tired of unemployment, and they are tired of politicians and big business who, if you like, in the new norm of moral values and being seen to play fair, are sort of not doing as the public expects. They're not paying their taxes, perhaps they're not acting with the integrity or transparency that they would wish. None of you will be surprised by that, but it does mean that today's businesses really need to grasp that in order to succeed in this new environment. They have to garner public support in order to win the license to operate, and otherwise they will struggle to survive, either with their reputation intact or survive at all. So what is the changing landscape for business? Well, Tim touched on a number of these in his talk a few minutes ago, and I've listed here some of those that I believe are having a major impact. As we've already said, businesses are facing a huge amount of change, whether it be competition, regulation, increasing scrutiny and disruption. And as we saw, sadly, only too well yesterday in Brussels, the world is a very volatile and dangerous place. And businesses are facing increasing threats in all sorts of areas, from geopolitics to changing and disruptive technology. We've seen the likes of Uber and Airbnb doing fantastically well. And just last week, we saw the introduction of robo-guidance, which has been suggested by the UK Financial Conduct Authority to fill a financial advice gap, which was left by change in regulation introduced by the FCA, but I think that was an unintended consequence of what happens when people need financial advice. So we're seeing business models starting to change, that's the point, and we're having to adapt with it. Tim touched on social media. We know we're under constant scrutiny, and organisations, as he said, are being held to greater account. We know that with greater public scrutiny, quite often comes greater regulatory scrutiny. And what does that mean? Again, Tim touched on it. It means increasing in costs, particularly in things like the banking sector, which affects the bottom line. And as guardians of the company's reputation, we're sort of now the function, I think, that has to act as sort of air traffic control to sort of monitor what's going on with these different stakeholders. So we have to examine our relationships with a whole number of stakeholders, and it's not just purely the financial media now that we're dealing with, but we're having to analyse the sentiment of all groups who have any relevance towards the organisation. This is where we need to add value. So what does that changing landscape mean for the businesses in which we're sort of operating or which we're advising? As I've said, some of the issues here, you know, none of these will be a surprise to you. But I think we could easily point to examples where there are organisations in recent times who haven't managed to adhere to some of these behaviours. And the three I referred to are Tesco's, BP and Volkswagen. And all three have had similar sort of patterns of behaviour in the sense that post particular issues or scandals, for want of a better word, their share prices have dropped by something in the region of 50%. And X years after each event, they still haven't recovered. Now, clearly, in each of those sectors, there are different forces coming into play, whether it be oil price in the case of BP, whether it's discounters in the case of Tesco's. But clearly, it has a monumental effect on a business when stakeholders lose trust in a particular organisation, and that's where we come into play very strongly, and that's where they need their licence to operate. Last week, I live in constant hope that organisations learn these lessons, but I just chose a random day and a random newspaper to find other organisations who are perhaps tackling various issues. And I found three different stories in the Times, one which was about the Kennel Club and Crufts, who had desperately tried to curtail a video showing a prize-winning German Shepherd who was sadly deformed. Clearly the video came out and was made public. The Ambulance Trust Chairman and CEO, who I think fell on their swords following the suppression of a report into a policy to deliberately delay responses to thousands of 111 calls. Beyond what is beyond that, I really don't get. And then Whirlpool and Hotpoint allegedly replacing risky dryers with faulty replacements. So as you can see, the lessons still need to be learned, and therefore there are still plenty of organisations and leaders who continue to take shortcuts, who might not act with integrity, and are perhaps more interested in self-preservation, dare I say it. And it's not the right way to build the trust and respect that we've got on the list here, and to act transparently or in a way that's good for society. So our role, therefore, is pretty important, because it is our role to challenge organisations and leaders' behaviour. And when I was asked by David and Philip to think about what has changed and what remains the same, I think our role has always been to challenge, and none of you on the phone will be surprised by that. That's what we need to do. We need to challenge constructively. Is the business acting in a way that it has promised to do so? Is it delivering on the strategy and on the numbers? And is it doing it in as ethical a way as possible, or is it taking shortcuts? Now, clearly, as financial advisors and communications advisors, we can't always know everything that the business is doing, but each business, particularly if they're quoted, does highlight in their own annual report and accounts where they see their risks, and that is a very good starting point as advisors for us to see what is the organisation looking at, and is it doing enough to mitigate those risks. And that's where we can start to add some kind of value by discussing those with the leadership team, and also by discussing the mood music of the key stakeholders related to the business as well. Is there perhaps a risk of shareholder activism or activism by NGOs in a particular sector? Is there a threat or retaliation potentially by regulators? If you're in the fizzy drinks industry, you should have foreseen that something called a sugar tax was coming your way, and I'm sure most people did. The same applies to something like the asset management industry at the moment, which is now undergoing a competition review by the Financial Conduct Authority. The writing on the wall for that has been at least 18 months, but I can bet there will be organisations, dare I say it, in the asset management world who haven't quite geared up to cope with what may be coming at them from the financial regulator, On the plus side, there will be many who see it as an opportunity to look at how they can adapt and amend their business and take it as an advantage. So I think that's quite an interesting dynamic. So our role is always a challenge. But I think our role, in terms of, as Tim said earlier, it's got broader, is much more now about joining the dots across the businesses. I think we're the glue that holds things together. And we are much more acting in that sort of air traffic control point where we are scanning the whole time for potential risks and opportunities to look on the positive side as well. I sat at a separate conference a while ago with Will Whitehorn from Virgin Atlantic, and we were talking about the role of comms, senior communications people, particularly in-house, and whether or not they sat on risk committees. And he gave a great example post 9/11 of how everyone clearly in the airline industry had to put in a steel door in the cockpit post 9/11. Clearly, if you're on a risk committee, you tick your box. Apologies to anyone on a risk committee, and the job is done. Our role is to do what is the unintended consequence of that. And what happened at Virgin Atlantic was they thought a pilot might have a heart attack, therefore you need 2 people in the cockpit. Clearly, we've seen other issues happen subsequently which were not foreseen. But that, I think, is where we have our role. We horizon scan to say what if and what might happen, and that's where we add, I think, a huge amount of value and therefore earn our place at the top table. I think, as Tim and Philip mentioned earlier, we have a role as trusted advisor. We act as moral compass for the organisation, and I think, you know, we hear the word authentic a lot in business, but it's true. The general public are now immune to political speak and to organisations and leaders who avoid answering questions. It just irritates. So our role can really help our leaders to be authentic and real and to be honest and admit when mistakes have been made and to learn from them and demonstrate that they've learned from them rather than just saying it for the sake of it. But we can also create opportunities by helping drafting coherent messaging and narrative for the organisations with which we work, and really help the senior executive with coaching and identifying those stakeholders with whom we want to have a good dialogue and good influence. And recognising who the important stakeholders are. Can't underestimate the importance of employees and how they can act as ambassadors for the organisation, or the reverse is to act as a whistleblower by highlighting bad practice, so it works both ways. And I think, going back to one of the earlier points, it's not just about being a very good communications person anymore or a financial PR expert. We have to have, in order to sit at the top table, you have to understand the business. You really have to understand the financials in order to be able to have a sensible conversation and debate at that top table and with the C-suite. And we need to be able to understand more than just the financial media, as Tim pointed out. We are sort of looking at a much broader range of stakeholders where everyone is interconnected and everyone shares views. Crisis management goes without saying. I'm sure most people on the phone, at the end of the phone, have had to deal with crisis or issues, and you become expert at doing so. And I think what's really key now as a trusted advisor is I think we have to be very careful when advising the leadership that we don't go into what I call communication speak. We have to talk their language. We have to talk a business language, and we have to talk about things like risk, adding value to the bottom line, and be much more analytical about what we do ourselves as a function. I think it's key if you're fighting for budgets, if you're making a business case, but it's no longer, I don't think, acceptable just to use your instincts to make a case for a particular point of view or action. I think you now need to have evidence and data to back up what it is that you're proposing for the organisation. And I think we have a huge amount of value to add as a business enabler for the organisations we work for and with. Some of the examples are here. We've seen the negative examples of share price and linked reputation. Clearly, the opposite happens as well. And I think where we can really help with in big business with things like IPOs and M&A activity is where we really help to manage the expectations of the stakeholders, whether that's on pricing, on the messaging for the organisation, and with sort of the particular regulators or competition authorities, for example. I won't go through all of these, but I think they speak for themselves as to where we really can add value as a business enabler too. So in summary, I do think our role is evolving and changing, but it is really relevant and perhaps more so than ever before, because what organisations need from us is also shifting. As has already been pointed out, we've got to be across a much broader range of stakeholders than ever before. We'll always have a role that's challenging, but as I said, we need to be a lot more, I think, as a function, more business focused, and I think lots of people are moving that way already, rather than just sort of being an expert in communications. So we have to have the business credentials to sit at top table and to be able to speak with authority. We always have to be adaptable in the role that we do. It's the nature of what we do. But as I said, I think we need to be a lot more analytical and results driven, especially when businesses and margins are under pressure. I'd like to conclude by saying that I think all of this makes our jobs fascinating, fun, they're intellectually challenging. We get to work, we have the privilege of working alongside incredibly bright people, and I think we can make a real difference to how organisations and leaders either behave and or are perceived. I think it will mean a shift as to how our roles change into who and what we recruit going forward and skill sets that we look for, but again, that makes it more interesting. And with that, I'll hand over to Philip.
Thank you, Maria, and of course, thank you, Tim. Before I see some questions are coming in, but I do urge you all listening in to send in your questions and certainly pick up on some of those points that both Maria and Tim have made. The first thing I want to ask myself, though, and Tim, I'll start with you, is you both described a lot of changes, and from all sides, whether they're internal to companies, whether they're external, whether they're about consumers, whether they're about economic situations. In your experience, Tim, in the last 5 years, I mean, are these changes unprecedented? Have we seen anything like this before? And out of all these factors, what's the biggest single change?
I think in many ways they are unprecedented, because I think we've seen so many changes all come at once. You know, whether those are issues caused by the financial crisis or whether it's the rise of social media, these are things that have changed the game quite dramatically. Which one would I highlight as being the most significant? It's a difficult question, but I do think the whole social media 24/7 news cycle is probably the biggest change in recent times.
Yeah. And Maria, would you say that's the biggest change for you, or would you say there's another factor that's bigger? And again, is this unprecedented in your experience?
I think it is, because I think what we've looked at is a number of different sort of forces coming into play all at once. We've talked about volatility, business disruption, new technology. So, you know, it's beyond, I think, just social media, because that's playing into how businesses are starting to interact with their end users. And if I use asset management as one of the examples from earlier, you know, I don't think, you know, a 25-year-old is going to expect to work with an industry that may not appear transparent. They're going to want information on their gadgets. So I think the way consumers are expecting business to interact with them is shifting massively, and therefore we're having to shift how we communicate with them as well. Okay,
and you both mentioned social media. I can see questions come in, and because he's so politely introduced himself, Ollie from the PR office asked about social media. Maria, I'll come to you first with this. And Ollie says, I just wanted to know, is social media always necessary, or are we getting so tied up with it?
Yeah, hi Ollie, and thanks for the message. I get your point about being tied up with it, because it is quite fleeting and transitory. I think where it's useful, from my perspective, is to start using it in an analytical way to watch trends and moods from either particular stakeholders or particular geographies, perhaps. So I think I would use it in a sort of a data perspective. Clearly, I think it partly depends on what kind of business or industry you're in. If you're in a retail business, then I think if you're in the business of selling clothes and you're doing the John Lewis's or Marks and Spencer's, then, you know, having the ability to talk directly to your customer base is fantastic. But we can get a bit obsessed with it, I quite agree.
Tim, are you obsessed with social media?
Yes, I am. No, I don't know if obsessed is. I think we use it in a slightly different way for our client. We use it very much as a tool to disseminate information. Within our group, we've got a service called Directors Talk, which has a website, Twitter feed. That's got 85,000 people who are interested in receiving news on smaller companies signed up to it. And it is a great tool to get to a lot of people. Lots of people expect their news to be free these days. That is free, and it will always be free to the user. But I agree that it can be a very good analytical tool to look at trends, to look at what's actually happening. It's a way of very quickly ascertaining the mood.
Yeah. Okay. I think both of you mentioned the value that can be given from an out-of-house perspective and an agency perspective, and I can see that we've got a great question here that alludes to that. So I think with this, Tim, I'll come to you first on this, and there's a statement and then a question, so bear with me as I read this out. The presenters seem to be suggesting that in-house practitioners can't deliver the same independence as in-house operators. What do our presenters then think the role of in-house experts should be? Tim, what do you think the role of in-house experts should be?
I think if you're in-house, you're obviously dealing with one company all of the time. So you have a much more detailed knowledge of what's happening and ability to look at the issues. The area of independence is always a tricky one. Ultimately, you know, who your employer is and who you ask to. Yes, in-house can be very independent. It depends on the personality of the individual. But I think, you know, what the outside agency brings is obviously a wider perspective, but not the same deep understanding that somebody who's internally will probably have.
Maria, you've been both in-house and now obviously you're in an agency. What's your perspective on this, and do you think it's independence is the issue, or are there other issues there?
Okay, no, it's a good question. I think going back to my slides, and that's the question, I'll go back to front. I think the role of the in-house expert is very clearly trusted advisor. I think that really is where the C-suite are looking to lean on a sort of day-to-day basis. I think where a financial PR agency or consultant adds value is they do have that sort of, they're less, if you like, emotional perhaps about a particular business, and as Tim suggested, they can bring a suite of different businesses' experience to come to bear, whereas when you're in-house, having been in-house, you can sometimes get a bit wooden trees. And I think even if 99% of your advice is fantastic in-house, I think sometimes the agencies can come up with the 1% that you didn't think of just because you're so close sometimes to the action. So having that ability to step back is much easier if you're in the agency world.
I'd like to ask, there's a great question here, which is, I think I might politely say, is alluding to some career advice. And Maria, if I could start with you, what advice would you give to someone who's starting out in financial PR?
Other than don't.
No, totally disagree.
No. What advice I give? I would say clearly you need to enjoy news. You need to follow a news agenda, and you've got to be able to enjoy watching broadcast news, reading Twitter, following the newspapers. You have to have that in your blood, I think. You have to have attention to detail. It's absolutely crucial. And I think you have to have the ability to network, to build really good contacts, relationships either with clients, with the media or other stakeholders you're dealing with. And I think it's a great career with fantastic progression. As I said, know your numbers. If you're going into financial PR, the more financially literate you can be, then the better.
It strikes me when you say that might have been advice that you would have given 10 years ago as well. I mean, it sounds like the fundamentals haven't changed in that respect.
No, I think that's right. I think the job is there to build the relationships. You need to build your knowledge in order to be an expert, in order to be credible. I don't think that's changed.
And Tim, what advice would you give to someone starting out?
I can't disagree with any of that. And actually, as somebody who's only recently started out in financial PR myself, I would take that advice. I think the key thing is actually networking. I think building that network of contacts, whether it be journalists, corporates, other advisors, is invaluable. and doing that as you progress through any career is invaluable. You know, many of the contacts and people that I am close to now are people that I got to know 20 plus years ago, and you know, they're now doing different things, and that can be enormously helpful.
Maria, how technical do you need to be? There's a question here that sort of relates to that and says that is financial expertise more important for this type of role than other areas of PR? How much do clients expect for their PRs to be FS, and I assume that means financial services experts?
I think if you're going to have the credibility, you've got to know your subject and you've got to know the clients and understand their businesses. And because you're talking about the context in which they're operating, whether that could be a political or regulatory environment, as we've talked about, you don't have to be, I'm not suggesting that we all have to become investor relations experts overnight, but I think having an understanding of why or what's happening with the business performance, what that might look like to the market, or to different stakeholders is quite important.
Okay. Tim, if I can ask you a different question that's been sent in. How do I prove that financial PR directly impacts the bottom line and generates a direct ROI? I suspect that will be a very simple answer.
It's a question I get asked on often on a daily basis, particularly with clients who are very, very cost conscious. It is honestly it's a difficult thing to measure. With our quoted clients, if share prices are rising, it tends to be that they think it's got more value than when share prices are falling. Actually, it can be the other way around, and companies need more help in bad times than good. It is a difficult thing to measure. But I have had clients who've gone away from using an external financial PR agency for a period of time and then come back to it, and they've only realised what they had when they didn't have it.
And Maria, with your experience, would you add to that in terms of proving ROI? Are there any secrets? Are there any things that there are simple sort of solutions to?
I don't know about simple solutions. Clearly, it's always hard to prove a negative. So when you've helped in a crisis, clearly that's almost impossible to put a value on. But we can see the value when it goes the opposite way around. I tend to work in a much sort of broader field. So I look at you put a sort of a benchmark in the sand at the moment, as it were, put a mark in the sand, and sort of say, where do we want to be? What would good look like in a year's time? And is that about who we're trying to influence and what we're trying to say message-wise to those particular audiences, and are they starting to land in the materials that are coming through? Because I'll give you one example where that was very clear. At the Financial Conduct Authority, we had 3 very clear business objectives, and therefore the communications piece had to support those 3 business objectives, and anything outside of that was irrelevant. So for me, it was about starting to track how those messages were being fed through the various media or being fed back to us via different third parties, and that I think is where you can start to see some traction. But doing the old-fashioned, here's an article, this is how much it costs, forget it really.
I can see that we've got still quite a few more questions coming in. We've got about 3 minutes left. So what I'm going to do is I'll ask each of you different questions. And Maria, shall I ask you, first of all, the first one, which is about tools. So what tools do you use, and what do you recommend for individuals and teams working in financial PR trying to succeed in delivering this elevated role?
Okay, thanks for that one.
I thought you'd like that.
Okay, clearly we use Gorkana. What tools would I use? Well, if you're going to do any kind of measurement, you have to have some kind of tracking. You have to be able to put a benchmark in the sand, as I said, and to track accordingly. So you have to put something in place to have some kind of data measurement. I'm a great believer in training, actually, and when I've ever had teams working for me, I've always tried to encourage them to get out of the office and to network as much as they can. So if you're in public affairs, you know, spend time with peers, spend time down at Westminster, the same if you're in financial PR, really go and learn from, well, some things like this from conferences, from other organisations who've had similar experiences. Again, when I was at the regulator, you know, I went to a talk from a tobacco company because they have to deal with tobacco regulators. So you learn from parallels from other industries as well. So I would definitely do a get out and talk to other people is one of the key things, and get on to the training.
Excellent. Thank you. And Tim, I should give you the final word by asking you possibly the easiest question that I can see, and that is, there are some agencies that have a merged corporate and financial services team instead of just being financial. Do you think such teams have the knowledge needed to manage FS clients, or should teams be purely focused on FS?
Interesting
yes or
question.
No? Yes or
No.
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 Please elaborate.
It's a team approach, and actually having combined teams, I think, can help. When you've got one corporate client, but you're bringing in various people with different skills. I think trying to put people in silos often doesn't work, because things do need to be spread, and I say it's a team effort.
Excellent. For the record, Maria's nodding there. So.
I quite agree.
You may not hear that, but she quite agrees. I have to say, there have been so many questions. That's been brilliant to send those in. Thank you so much. Also, a lot of compliments for our presenters, and those are highly justified. I do want to say we'll make the slides available afterwards, and we can send you a link of the recording as well. So please do look out for those. If you didn't manage to get all of the webinar, we will make that information available. The worst part of my job really is to say that that's all we've got time for, I'm afraid. But I do want to really thank Tim and Maria for their presentations, their time and their insight today, and for dealing with some of my questions as well, which I know put them on the spot. And that, of course, is Maria Darby-Walker, Senior Director at Citygate Jew Rogerson, and Tim Metcalf, Managing Director and Co-Founder, Investor Focused Communications. Thank you both. I also want to thank everyone who's taken the time to listen into the webinar and to take part. Thank you all for your questions. They've been highly stimulating, and again, as I said, helped me put everyone on the spot. Our next webinar is in April, and that will be on a very different subject, the role of virtual reality in media, and I hope that you can join us then. Look out for details on Gorkana.com. So that's it, I'm afraid, from Tim, Maria and myself. See you next time. The webinar is now